there's just so many other forces at play within the broader market. It's hard to really unpack exactly what's going on. If you do look at the after-hours trading after they reported, the stock was essentially flat, but it started to drift down a couple percentage when they talked about some of the seasonality for the March quarter and talked about typical seasonality. Now, I think when you say that, by the way, that the street was modeling for that typical seasonal decline in March, a 33% decline from December to March. And so the numbers were right in line with where analysts were expecting. But when you say that it's going to be typical, what that implies is don't expect a big beat in the March quarter. And I think that was probably some of that decline. I think what's most important is just to take two steps back. It's difficult to really parse out exactly why the stock is trading down a few percent in the aftermarket. What I think is what I'm more focused on here is does the company have they laid the groundwork to continue the kind of success? I mean, this was just a blowout quarter by all metrics. Do they have in place the business segments to continue that growth?
Well, do they? You see 40% more upside for the stock over the next 2 years. What will drive that performance? And pardon the pun, but will it be all about the potential talk that we've heard around an Apple car?
That's a big part of it. Or a part of it, I should say. But the pieces that I believe are going to think that it will continue this forward is this accelerating digital transformation. We saw it in the December. It came throughout every business segment. They beat in every segment except Mac, and that was supply constrained. So consider this digital transformation, this acceleration happening. That means that we all need more hardware devices to live our everyday lives, and Apple's going to benefit, I think, for that for the next 1 to 2 years, this sustainable tailwind. There's a 5G tailwind. This played out in some of the iPhone numbers. It was up 17%. The street was up 7%. And when you put those two together, you should have numbers going up for 2022, which is another positive. And then the last piece, to get back to these other product categories, which their optionality today, it could be some form of augmented reality glasses, or, of course, the car is a big opportunity. And I want to credit analyst Katie Huber. She asked a question that got a little bit, that caught my attention when she asked Tim Cook about what they look for in an addressable market. And he talked about areas where they can bring their hardware, software, and services together. And I think that the car fits some of that profile of bringing hardware, software, and services together. So if there's more talk of the car this year and those other three pieces come into play, I think that my opinion is that 200 is achievable over the next couple of years.